Good morning, I'm Fred Ruffy with Trade Alert here at the CME Group for Traders Exclusive. It's Thursday, Feb 21, and wow, what a difference a week makes. Last week, the average daily move in the S&P 500 was 1.3 points. Prior to this week, the average daily move in the S&P 500 was 0.43%. The 5-year average is 1.08%, and so there's a big decline in 2013, and that was actually the biggest drop in volatility since the 1930s. This week's a different story entirely, though. The S&P 500 was up 11 points Tuesday, dropped 19 points yesterday to suffer its biggest loss so far this year, and is down 7 or 8 points right now. So a big increase in actual volatility. And some of that was, of course, due to news yesterday. There was the FOMC minutes from the January meeting where Fed officials were debating whether or not the quantitative easing program that they've implemented over the past couple of years, if they should kind of ease off of that, and what are the risks of this aggressive easing. So the market didn't really like that. There was a negative reaction. S&P 500 suffering its biggest loss of the year, and implied volatility moving up across the entire market. VIX saw its biggest percentage move of the year yesterday and is up again today, approaching 15. So in terms of individual options contract, where we're seeing some defensive activity or maybe some hedging activity heading into other important events in March, VIX April 25 calls have a lot of open interest. Almost 260,000 contracts, a lot of open interest in the March 20, March 25, and April 20 calls on the volatility index as well. That's positioning maybe on concerns about an increase in market volatility. Yesterday we saw a lot of activity in weekly 150 puts on the spiders, ticker symbol SPY. It's the S&P 500 Trust, which trades around 150, 150. And these were in the weekly puts that expire on March 1st, which is also the deadline in Washington for sequestration. So this may be some hedging activity, taking positions in March 1 puts, meaning the puts that expire on March 1st, the weekly puts, downside 150 puts on the S&P 500, maybe some hedging activity around this event. And then we've seen this week a lot of opening activity in April 114 puts on TLT, which is the long-term Treasury bond ETF, trades around $116 per share. We saw about almost 60,000 contracts open in the April 114 puts on TLT so far this week. So VIX upside calls, SPY weekly 150 puts, TLT April 114 puts. Those are all probably hedge trades, kind of reflects the increased anxiety and bearish sentiment that we've seen in the market so far this week. I'm Fred Ruffy for Traders Exclusive, and I'll see you next time.